Well, the Reserve Bank has surprised us again. Most economists were expecting interest rates to stay on hold today. Instead, the RBA lifted the cash rate to 4.1%. And you can tell from the big jump in the Aussie dollar how surprised people were. So the question is, how much higher could rates go? Markets are now betting there could be one more rate hike in the months ahead, with the chance of a rate cut by Christmas looking pretty unlikely. So what's changed? In a statement, the RBA governor said some further tightening of monetary policy may be required to ensure that inflation returns to target in a reasonable timeframe, which is exactly what he said last month. But now people realise he may not be bluffing. Philip Lowe also said goods price inflation is slowing, but he's worried that services price inflation is still very high and very persistent as wages rise, while productivity growth remains subdued. Already, consumers are cutting back their spending on things like clothing, health, and even food. And this trend is likely to continue, so that path to achieving a soft landing is looking increasingly narrow. Meanwhile, it was a bad day for the share market, with the All Ords down 1.1% and big losses for stocks like ASX, Domain and Qantas. Overseas, Wall Street fell slightly, while it was a mixed bag for Asian markets. In commodities, oil prices gave up some of yesterday's gains, while gold is down slightly. And finally, the Aussie dollar is much stronger at around 66.7 US cents. And that's finance.